Term that you might encounter is terms such as bid. The term bid is basically the exchange rate that the market maker is willing to purchase the base currency in a currency pair. So basically what we're saying is that you are going to make a bid to either buy or sell, and this is the market price that the broker is going to offer you that currency pair at. And another term that you're going to come across is long position. Well, long position, this is the term which means to either purchase a currency pair, which involves buying the base currency and selling the counter currency. So for example, if you're buying Euro USD pair, you are basically buying the euro, saying that it will increase value against the United States dollar. And then obviously we have the opposite of going long, which is short position. Short position is self-explanatory. This is where you're selling the currency. It's the opposite of buying Euro USD. So for example, you're going to sell the euro against the United States dollar, meaning you're either seeing the United States dollar is going to gain in value against the euro, or you're seeing that the euro is going to fall against the United States dollar. And we have another term which is offer. And offer basically means the exchange rate that the market maker is willing to sell the base currency in a currency pair at. So this is basically the price at which the broker is giving you that currency pair at. And we have pip. If you've watched our previous video, you would have seen that we explained what a pip is. And for those of you who haven't, a pip is basically, it stands for percentage in point. And some people might call it a point, or pip is another term. It's all the same thing at the end of the day, and that represents the minimum price fluctuation possible in a forex transaction. A pip is typically the last decimal of a currency pair quoted exchange rate and is equal to 0.0001 for most currency pairs. And then we have a spread. Like again, we explained that in our previous lesson. The spread is the difference between the bid and the asking price provided by a market maker. The tighter the bid offer spread made by the market maker, the better the price usually seems to their customer. So some brokers actually offer zero spread. If you go onto our website, you'll find some of the brokers we use, some of them actually offer zero spread, which means that they're not charging, there's no difference that they are charging between asking and bid price. And then now we move on to retail forex trading terms. And retail forex trading terms, we basically have the main one that you might see, retail forex trading term. This is a very used term, which is leverage. That's the ratio of the amount of money on deposit you need for a given transaction size. Leverage is usually quoted as a ratio such as 1:50. Some brokers even offer up to 1:1000. Which means that you will need $100 on deposit to control a trading position of $5,000. So you better be sure of the leverage you're using on the broker, because sometimes you may deposit $100 and it may appear as 5,000 if you have a leverage ratio of 1:50, but you will lose twice as fast if you don't have the right strategy. Alright, and then we have margin. The amount of money you need to have on deposit with a forex broker to make a forex trade in a certain amount. So if your leverage ratio is 1:50, then you need to have $100 of margin on deposit to trade the forex position with a $5,000 notional amount. So in simpler terms, that means that for you to place a trade of $100, you must have on deposit $100 to place that kind of trade. Like let's say if you want to buy 10,000 units of Euro USD, you must have at least about $50 to place that trade, depending the price at which you're buying or selling. And then we have another common term that you need to know, lot size, which is basically simple, the minimum trading unit for a forex broker account. And we have the types of lot sizes. You'll find there's a standard lot. The lot size is usually 100,000 base currency units for standard account. So if you have a standard account, you're trading 100,000 base currency units. That's the lot size, 100,000. And then we have mini lot, and mini lot, that's 10,000 base currencies for mini account, and micro lot is 1,000 base currency units for micro accounts. those are the accounts in the $100 area, and mini lot is a account basically in the $1,000 area, and a standard lot is a standard account of